So you are at Future Ready Lending with Truvion. My name is Ben Herring. I am the Director of Partnerships here with CUCollaborate. I've been in credit unions now for about coming on 14 years. Used to work at a credit union up here in Minnesota, which is where I live and work from. And then prior to joining the CUCollaborate team, I worked for the LID, the Minnesota Credit Union Network here in Minnesota, serving the needs of credit unions throughout our state and region. CUCollaborate, for anyone who isn't familiar, I can see some familiar names on the call here. But if you don't know who we are a data and analytics CUSO. Our primary focus is around credit union growth. So anything that goes into helping you reach more members and perform better, have more impact. We are very well adept at serving the needs of credit unions in that space. So our primary focus is around kind of leveraging our own proprietary data and data points, external data points for us to drive technology needs for our credit union clients, and that paired with kind of like a deep subject matter expertise in several different areas of credit union growth. We're hopeful that we can help credit unions succeed on into the very long future. A few of our areas of expertise, as you can see on the screen here, like I mentioned, really focused on growth, performance, and impact. The actual tangible things that we do, field of membership expansions and charter conversions are kind of our bread and butter, along with some of the access to what we call beneficial regulatory programs like the CDFI certification, like the low income designation. And the way that I describe it is we develop and evolve software, and we also have a full team of consultants that help our credit unions build out strategies and grow. And so you can see everything else that we do here on the screen, but really want to focus on some of the things that we do in partnership with organizations in the credit union ecosphere. And so when we look at partnering, we find organizations that can help our credit union clients take the strategic directives that we have been working on with them and to that next very tangible, like actually pulling levers of what you can do day in and day out in your business. And so I'm going to go ahead and pull down my slides and allow Victor and his team to get set up while I'm talking a little bit about how we go about partnering. So if you haven't heard us talk about our partnerships before, what we do is we leverage our software that we've built and leverage APIs that we've created, give them to our partners, and allow them to, say, identify when a consumer is falling within a CDFI investment area or a low income designated geography. When we met with Truvion last year, we saw really a nice symbiosis of and connection point to some of what they were focused on. They came to us and said, hey, we really want to focus on serving CDFIs and helping credit unions with their CDFI certification through the lending platform that we have. They also help credit unions and financial institutions across the country just with their lending portfolios in general. So whether or not you're focused on CDFI, if you're focused on the low income designation, Truvion can help you there, and we'll be talking about that a bit in more detail today. But they can also help if you're just looking to grow your lending platform and make it, as the title implies, future ready. So with that, I'm really excited and honored to present to you and introduce you to our partner, Victor Liu, who's going to be presenting on behalf of Truvion. Victor?
Thank you, Ben. Appreciate it. Thank you very much, guys. Thank you for the warm introduction. And everyone that's on the call today, I want to say thank you for taking your time to join us. My name is Victor Liu. I am the principal of Truvion. Who is Truvion? What is Truvion? Truvion is a multi-state lending organization focused on delivering diverse suite of financial products that are designed to meet the evolving needs of each one of our clients across the country. We're very excited to be in a partnership with CUCollaborate to share how this collaboration opens new doors, particularly in the CDFI space. By us joining forces, Truvion now can uniquely position to offer credit unions access to specialized lending solutions that align with CDFI goals and help expand access to capital to underserved communities out there. This partnership represents more than just shared resources. It reflects a shared mission. Through potential future relationships with credit unions like yours, we believe that collectively we serve we serve even more clients who qualify under CDFI designation, helping your institutions grow while driving meaningful impact where it's needed most. In a few moments, I'm going to walk you through a presentation that outlines the benefits of us working with you guys working with Truvion. Whether if you're in the process of trying to obtain a CDFI certification or looking to maintain and recertify your current status, we're all here to explore our partnership with CU Collaborative and us, and we can support and enhance those efforts. So with that being said, let's just jump straight into the presentation. So future-ready lending with Truvion, and who are we, what do we do, and how is this beneficial to every one of us that is on the call? Right now, based on the target population in CDFI, there's about 100 million Americans that can fall within this target population. Unfortunately, a lot of them don't have the resources or access to the capital or the lending products or asset classes that are available. Through this partnership, we're hoping to solve that solution, provide a solution to that question out there. How do we get to them? Our expansive reach. Currently, we are licensed in 25 states throughout different lending products that are out there. The products that we're offering specifically in this call reside in these three primary categories, which is number one, residential mortgage, number two, commercial real estate financing, number three, personal loans, and number four, business loans, and every variation within those categories there. We are a VA-approved lender and also a Title II HUD lender, which allows us to conduct the origination funding of all VA and FHA loans. Financial services infrastructure designed for inclusion and growth. Our organization is different in many, many ways in that we take a very holistic approach with our clients. We believe that clients are not simply comprised of a single financial product, such as mortgage, such as auto, such as personal loans. We believe that your entire life in financial services really kind of intermingles. What our technology does, it looks at a holistic picture of the clients. And with that being said, we find opportunity, okay? And that opportunity can come from savings, it can come from an arbitrage, it can come from consolidation. So our technology finds the next best action for these clients. And from there, our proposal to the clients in terms of solicitation occurs by reaching out to them through our marketing strategies, through our marketing technology to get them interested so that we can provide this product so that they can see if this fits their family. Truvion and CU Collaborate. We share a mission for credit unions. So how do we do this? Once we do find the opportunity, we find the client in the four categories of products that we are offering. We look at the target population and does it fit within the CDFI realm? Obviously, we understand that the three categories that would fit in the CDFI realm would be IA, your investment area, LITP, which is your low-income target population, as well as OTP. Through these four products, we work directly with CU Collaborate and their technology to discover and find if it does fit within the CDFI realm. As discussed earlier, IA, LITP, and target populations and other target populations. Within these three areas, we initially start with using the technology from CU Collaborate. Once a client comes in, we utilize their technology to see if it fits within this geographical area. If it does, then it falls within the realm of the CDFI platform. Further, we evaluate the clients on their income levels, okay? If a family income adjusted for a family size is 80% or less of that area, the area benchmark, then it fits within the LITP. Further, we'll look into the OTP section of CDFI. And it really breaks down into two different categories of minorities and disabilities. We'll touch upon disabilities in the next couple of slides, but it's a very new change that fits within the CDFI platform. And it's really based on 88 disabilities that have been designated out there. IA, defined by high poverty, low medium income, or unemployment. Over 100 million Americans live in IA designated census tract. CU Collaborate's API flags IA qualifications by verifying applicant address against federal tract maps. With that being said, like I stated, it's not specific on a specific product. It could fall within residential, it can fall within small business loans out there. It can fall within personal loans. So the way we've integrated their technology is into our system where every single transaction as ran is ran against their technology to see if it fits within this target population. And if discovered, it's an opportunity for the credit unions to work directly with us and us to work with credit unions to deliver that paper to them. LITP. LITP is your low-income target population, which includes individuals and families earning 80% less than 80% of the area median income out there. As stated earlier, we look at every single client based on ATR, and if you're looking at residential mortgage, we're looking at QM as well too to see if they fit within that realm of the CDFI platform. If it does, then that's another opportunity that we can deliver this paper directly to our partners out there. Lastly is OTP. As discussed earlier, OTP really is designated by two different categories. Number one, people of minority race, and secondly, the disability. Certain minority groups that we're looking at: African Americans, Hispanic Latinos, Native Americans, Asian Americans, and other federally recognized racial ethnic populations out there. Pretty self-explanatory. This is really what I want to touch upon. In December 7th of 2023, CDFI recognized people with disabilities based on ADA targets out there as part of this part of inclusion in the CDFI fund. On the left, you can see physical disabilities, mental disabilities, and other disabilities. I'm going to leave this up for a second because this is a newly targeted population that's fairly new that can be more inclusive of a population out there that could be part of the CDFI group. Ben, will we be sharing this presentation out to the people on the call today?
Yeah, we'll share this out so you can take a look and understand better what ADA defines as physical, mental, and psychological disabilities and other disabilities here. I think the main point is how might credit unions really leverage kind of like this new addition to the other targeted populations, the OTP target market, to not only better serve your community but also grow your and expand your reach into your communities.
Well, it's simple. There's a couple ways to be able to define yourself within this OTP category. You can either present the disability itself, but sometimes that could become a little bit of an issue because of HIPAA that's out there. Other ways is self-proclamation, self-declaration of the disability out there. But obviously, that's a conversation we can have one-on-one with each one of our partners out there, and we can describe further how they can fit into these categories. So I'll leave this, I'll shoot it to Ben, and Ben can shoot it out to you guys so you guys can take a look at who falls within these categories. Let's talk about our products out there. So the product range that we're offering on the residential mortgage side is essentially these products. We have the conventional, we have the government loans such as FHA, VA, and USDA. We do conduct a lot of non-QM loans out there as well too. Predominantly these fit for investment properties for clients out there. Now, in addition, through CDFI, it gives us an opportunity to create new products. So with our partners, we're very interested in discussing the appetite of each one of the CU partners that we potentially could be speaking with. And that's really not just around the residential mortgage space, but it could be on the personal loan space, it could be in the business loan space. So I do welcome that conversation outside of this webinar to have those discussions. But we are focused here on residential mortgage, and we do the same exact thing to see if they fit into one of those three categories of IA, OTP, or LITP. And if so, then they would fit within that target population of the CDFI. Secondly is commercial real estate, proficient at it. And if this is something of interest to our credit union partners out there, we'd love to have a conversation on the appetite and the credit box that each one of our credit union members would love to discuss about. Small business loans, significance, one of the main missions for CDF or the CDFI fund out there. And in addition, we can talk about owner investor commercial real estate properties out there, business loans. We can discuss even proprietary products that you guys might want to develop on the side that might fit your appetite and credit box. Personal loans, multiple reasons for personal loans out there. This is significant because it can increase your field of membership, your membership basis in your credit unions. We use the same technology through CUCollaborate's IA, LITP, as well as OTP, and if it fits within that box, then we can deliver such paper, increasing the membership on your organization. Keeping it sweet, keeping it simple, guys. We utilize as many platforms as possible so that we can see if we can expand your membership, assist in your CDFI certification, or if you already have your certification, looking to recertify by meeting the percentage criterias from the CDFI fund. So how do we do this? We have proprietary marketing on our side. We use multiple forms of marketing. A lot of it is digital. We do have a lot of LLM attacks that we go directly to our clients and solicit our clients. But more importantly, the way we achieve this is by looking at this client holistically. And like I said earlier in the conversation, we look at the client from multiple facets, and then from there, our technology derives the next best action that will be beneficial for the clients. Once we conduct that next best action, we solicit to the client and see if there's any interest level on the proposal. If so, the application comes in and we conduct our analysis against the 3 targets of CDFI. From there, we will deliver the paper, we'll underwrite the paper, either act in the capacity as a lender or broker, because we do have both capacities, and ultimately exiting the paper directly to our partners out there if this is of their credit box and their interest. So keeping it simple, guys. I would love to speak with you guys, talk further about what your interest is, how we can help the credit unions out there, either that being a CDFI certification or recertification or increasing your memberships out there. I'd love to speak with you guys one-on-one, and I really appreciate your time. Thank you very much.
We wanted to open it up for questions. I know we kind of went through a lot, in a very short amount of time. Did that purposely to be respectful of your busy schedules out there, but also wanted to kind of like dig into a couple different areas that we're hearing from our credit union clients as they're working with our partners. I think one of the things that I'd like you to talk a little bit more about, Victor, is as a credit union, how does it work when? Okay, so I have credit parameters for a particular asset class. How does that piece work? Can you walk us a little bit through the process of understanding a credit union's buy box and how you're capturing in consumers to bring to the credit union?
So we have our technology on our side. So the buy box is based on a knockout platform. So as we have individual conversations with each credit union, we'll understand the criteria, either that being a debt to income ratio, an LTV ratio, whatever the parameters might be, and essentially will be designed within our technology. As the applicant comes directly into our system, obviously an application is taken and documentation is received. From there, there'll be a knockout. So we will understand exactly what appetite for which credit union will fit within this buy box. And then from there, the delivery would occur, or an introduction to that specific asset class will be introduced directly to that credit union or that specific client.
A lot of our credit union clients have kind of like systems set up already, right? They have their LOS, they have maybe some Rails to get applications from outside in. Can you tell us about if you have any integrations or what the tech stack required would be to work with Truvion?
Well, we have a very robust technology team behind the scenes. So I guess it's really dependent on the asset class, as origination systems differ from product to product. It's a conversation we definitely can have offline and understand what technology you guys use so that it's seamless. I would have to say some products are more mature than other products out there in the marketplace. For instance, residential mortgage is a very, very mature type of asset class in the marketplace out there, where there's been a robust technology that's been built and we can tie our APIs directly into it. Personal loans, maybe not so much, but we can develop portals and integrate directly with the technology that the CUs are utilizing so that we can deliver correctly. But I think it's contingent upon the product and the individual usage, the technology that each CU is operating off of.
I don't have any questions or comments coming through yet, but I do have some questions that were submitted to me prior to from credit union folks. So as we're waiting on maybe some comments or other questions coming through from our attendees here today. So I know a lot of credit unions who are, whether or not they're focused on CDFI specifically, or if they're just focused on providing loans that are reaching their membership. Tell us a little bit about how your small dollar loans or credit builder loans might integrate within like the current product lineup.
Explain that one more time, Ben. I got a little lost there. Sorry.
No, that's okay. I went into a big narrative there. So you're doing, for example, you're doing personal like unsecured loans, correct?
Sure.
How does that work from a like an integration standpoint? How are you partnering with credit unions to deliver those personal loans that may be in addition to the personal loans that they're already doing?
If I'm understanding correctly, obviously with the credit unions, there is certain work that needs to be done on the applicants. Obviously, the membership is very important when we're delivering directly to the credit unions. So understanding in our technology, aside from the application, the simple LOS that's utilizing to achieve the transaction of the client, it goes back to the conversation of the credit box. Okay, it goes back to the CUs. What is the appetite of each CU? Obviously, there's different appetites, different risk levels out there. And based on our technology, we understand the documentation that's needed to be part of that membership of the CU will be injected in our technology. We will have constant conversations. Should the credit box adjust over time? It's a working relationship where they might, example, okay, today their minimal credit score might be a 620, that their appetite, and maybe 3 weeks from now, if guidelines or the market tightens up, they might be looking at a 660 credit score. Okay, constant conversations like that based on the credit box can be adjusted on the fly on our side. But even with that being said, the appropriate documentation for delivery to the CUs would be comprised in our system so that it's an easy, seamless delivery. We essentially, in layman's terms, we know what you want. Let's get you what you want.
Nice. So this is actually a really great question, and one I get pretty frequently when it comes to credit unions partnering with our relationships. So Amanda had a question here, two of them. The first one is, with credit unions that you're serving through your channels that might have potentially overlapping fields of membership, they serve a similar population and criteria. How do you route those loads? Like basically, how do you decide, where an applicant is going to go?
If you have overlapping, well, it really depends, and I think that's an offline conversation. I think it comes down to obviously execution of pricing for the clients. Okay, we want to serve the client first. That's the first and foremost thing. Execution of the client is first and foremost. Reduction of fees and costs to the clients, because even though we're in the business here as a for-profit business, we always don't want to forget about our clients. We don't. So it really drives down to price and the best possibility for our clients. I think that's what's important for us first. And we'll be transparent. We can be transparent. We'll be very transparent across the board. And these are working conversations. I like to have working conversations because we can understand this CU might be 300-400 basis points off from the market out there. I want to have that conversation because we want to deliver. We want to spread the paper across so that we can increase the membership for every CU. But if they're out of market, we want to have that conversation. We want to have a dynamic, open conversation where we can say we want to deliver, but here might be the issue that's come into play.
And then on the commercial side, commercial real estate, does the credit union need to be? This is also from Amanda. For commercial real estate, do you need to be prepared to buy the whole loan? So does the credit union need to purchase the whole loan?
We can do it either way. You can buy the whole loan, okay, or we can broker the loan directly to you guys.
This actually kind of goes back into a little bit of that first question around overlapping, but curious on white labeling. What does like the branding presented to the consumer look like? Is it credit union branded? Is it Truvion, or how are these offers presented to the
The offers are initially presented as Truvion, okay? And it's because we do not know until we understand the applicant, right? Once we understand the applicant, we understand the credit box, and then from there are disclosures that come out based on the credit box we understand. So with that being said, then after disclosures come out the second time around, then it is branded with the credit union as well too.
Checking my Q&A box here.
With everyone on board, I do have a question. In terms of asset classes, what asset class would you say most of you credit unions would be most interested in?
We should have made a poll. I think it's a little bit too late for us to make a poll. We could ask for a poll. I'm sure a lot of our credit unions would be able to chime in on that. Whether they're looks like we have a note for commercial real estate. I know a lot of my credit union folks are asking for personal options to increase the number of individuals that they're able to serve.
Okay.
And getting a lot of comments around either expanding or starting, depending upon the size of the credit union, dipping their toes into residential mortgages. And so I'm sure that you're probably going to, it might even be dependent upon the day and the market. And so I think that would be a great question for us. And maybe we'll do a question out in our follow-up materials too.
There's in the follow-up individual conversations, I would love to share with you guys the marketplace, which would be very beneficial for the credit unions. With your CDFI certification designation, it without lack of a better phrase, it gives you a lot of leeway, a lot more flexibility with that certification. I can expand upon that in a later conversation, especially when it comes to residential mortgage. So you're holding significant secured asset classes that are out there. But I would please do reach out to me because I would love to have a conversation with you guys on how to expand your membership. But the volume level of the membership, as you all know, on the residential side is a significant dollar amount. So would love to talk to you guys about that and kind of give you some insights what the market is doing, even outside of the CU space, that can be adopted for the CU space.
And I think I mentioned, I had this one kind of an offline question here. SBA, you guys are able to provide.
We'll broker those SBAs.
And so do you handle the documentation and the loan packaging?
The actual loan packaging would have to happen from the CUs.
Right. Okay. All right. Any other questions, comments before we wrap it up for today? So as mentioned, we'll send out a follow-up email that'll include the recording from today's session, as well as the slides from today, and ways to reach out. Victor, if you don't mind, could you maybe toss your email in the chat if anyone wants to reach out to you
Sure.
today or directly? Otherwise, here I can too. Truvion.
Just put it in there right now.
Fantastic. So feel free to reach out to Victor directly if you have any other questions, and be on the lookout for our follow-up to today's session tomorrow morning. With that, thanks everyone. Have a wonderful rest of your day. Thanks, Victor.
Have a great one, guys.